Hey harvesters, and welcome to the channel where we run simple and straightforward option trading to generate income. My name is Matt, and in today's video I'm going to go over the last week's progress. We're going to talk about some high level premium I've generated throughout the week. I'm also going to go over the trades I executed for November 21st because I haven't gone over those yet. The other days last week I have already made videos on it, but I haven't gone over November 21st, covered calls and cash secured puts. And then we're going to take a step back. We're going to take a look at the project state of the union, meaning I'm tracking a bunch of different metrics. We're going to see how much premium I've generated from 156 trading days, and then I'm going to call out a couple of things here and there. Lastly, based off of what I am invested in, I'm going to talk about the trades I plan on executing for next week and tomorrow, November 24th. So let's get the ball rolling. You guys know me. The first thing I like to talk about on my channel is my Robinhood account value from the Robinhood screen. I'm basically going to take this number and then insert it into my spreadsheets and then generate my metrics that way. But I wanted to show it to you from the raw source itself. So currently the account is at $196,866. We're just going to take a look at what the last week did to me. Last week, we're down $7,200, which is a 3.55% decline. Looking at it at face value, that's not a good thing. But guess what? I didn't sell anything at a loss. So theoretically, this is just a paper loss. Nothing really happened. I know I'm investing in a good investment, and I know with time that they're going to go back up. So I have no worries in the world. I'm not losing sleep that my account is down a certain percentage. If you look at the last month, that's pretty much the story of what the last month is. It says I'm down about $15,000, about 7.16%. I will say, because I am using some margin, when the markets go down, my account looks worse. But guess what? If you don't sell at a loss, you didn't really lose the money. And if we look at the last 3 months, I'm doing pretty good. We're up, 7.97%, and we're up $14,000. So if you look at the last week, last month, everything looks bleak and bad. But if you look at the last 3 months' performance, everything's actually looking pretty good. So let's head over to the spreadsheets and let's start talking about the numbers. If you guys remember the video I made on Thursday, I said I don't know if I was going to run any trades for Friday, November 21st. However, the price of QQQ was so lucrative that I had to buy 100 shares, and then I ran a covered call on it. The shares that I bought were at the 586.75. This is just such an amazing price for QQQ, because if you look at the last time it was at 586, it was a couple of months ago. So you're basically getting to buy shares at discount. And then the QQQ at some point, a few weeks ago, was at the 638. It was at the 638, and I was trading at the 586. So that is a steep discount to me, and I decided to scoop those up just so I can see if I can gain some premium and then buy some shares at a good price. So what ended up happening for those shares? So I ran 2 options. The previous day, I got 100 shares of QQQ assigned at the 605. So what did I do? I ran a covered call choosing a strike price at the 605. Because QQQ opened up at the 587.50, the premium was really low because the strike price to where the at the money is completely different. So therefore, it was a huge discrepancy. I didn't make that much money, but one of my main goals for running my own trading and my own options is I never choose a strike price below my cost basis. Because my cost basis is 605, I will not choose something lower, because I haven't been bit. Every time I've decided to go below my cost basis, I'm always getting bit. So I decided to just stop doing that. I'll just take bad premium, or I'll just push expiration dates further out so that I can make up that premium that way. But like I said, QQQ opened at the 587.50 and then closed at the 590.16. This option expired worthless, bagged $10, no questions asked. For the QQQ that I bought on November 21st at this discount of 586, chose the 588 strike price because I didn't know if this market was going to keep going down or if it was going to make a little bit of a recovery. And on Friday, it actually made a little bit of a recovery. So what happened? I was able to lock in a ton of premium upfront, and then I also was able to lock in appreciation at the same time. So what played out? I made $440 of premium just off of this one trade, which was actually kind of a lot of money. I was surprised. And then from buying my shares at the 586 and selling at the 588, that was a $125 gain. So from that one trade, I made $565. In total for November 21st, I made $575, and that was a solid way to end the week. So that's why you can't really be afraid to make a trade if you know full well that these share prices are at like relatively low. So you have to have conviction that yes, the market's going to go up. I decided to take advantage of that conviction, execute on the conviction. And what happened? Made $565 extra when I was initially going to do nothing. So if the market conditions are ripe, you got to take advantage of it. You can't sit on the sidelines. So let's head over to the other side of the spreadsheet and let's talk about the project State of the Union. Okay, guys, now that we are at the other side of the spreadsheet, let's go to November 17th. For November 17th, I made $1,572. For the 18th, made $857. For the 19th, $425. Thursday, $105. And then for Friday, $575. For running my own trades and trading 156 days, I've made close to $71,000. The actual number is $70,961. And we still have one more week of November to go through. So I'm definitely quite excited. If we look at how the percent return based off my initial investment, which is all the money that I brought over from last year, in addition to cash I put in this year, that's $150,000 and the account's at 193. That's a 29.02% increase. And just from Thursday into Friday, that was a 1.7% gain on the day. Now, taking a look at my win percentage, I'm winning 98.72% of my trades, 154 winning days, 2 losing days. Those were chalked up to investor inexperience and just poor planning on my part. And I started running my own options back on April 11th. Initially was investing in a high income ETFs, sold the promise that you can let somebody else run your options for you that are going to make more money for you. That's a fallacy. I didn't like the NAV erosion. When the markets went down, they went down hard. So those type of investments are only short-term for me, or don't invest at all. And then me running my own options, I haven't been happier. I've been getting better sleep than I ever got in my life. And yeah, I'm pretty happy with how the results are playing out thus far. And especially with the market that it's in, from doing the weird tariff times in April to then the market shooting up to then, it's randomly going back down. So this was definitely a crazy market to start my own options trading. It wasn't just a very linear. It was just all over the place. Different news is affecting the market in different ways. But that just might be the average market. That's what is the average market. But I'm averaging about $454 a day. If we look at that as an average weekly, I'm making about $2,217 per week. And then if we look at that as a monthly average, I'm making about $8,635. And we will see if the averages that we are seeing here are relevant to what I'm seeing and the actual weekly numbers. So for 2025, I know I wasn't going to trade for a full calendar year. So I decided to project out what some of the earnings might look like if I were to trade for a 12-month period. And what did I do? I took the average weekly premium, multiplied it by 52 because there's 52 weeks in a year. And if I were to trade for a full calendar year, I should make about $115,000 of premium. And if you look at that as a return based off of my initial investment, that's about a 77% return. So that is pretty good. Of course, if you invest the money that you've generated into the market, and are down and it's been red for about 3 weeks, of course, your percentage is going to look bad. That's why it's 29.02% instead of, 3 weeks ago, it was at 43.60%. But anywho, let's head over to the weekly numbers for November 17th until November 21st. I made $3,534 of premium. So for another red week in the market, I am still able to produce income so that when the market does turn bullish, boys, man, my account's going to look greener than ever. And so as we saw from my average numbers, I'm averaging about 2,200 per week. This week, 3,500. Last week, 4,700. The week prior, exactly the average, about 2,200. So November has been really good to me, even though the market wasn't too good to everybody else. That's why I like selling options. That's why I do not like buying options. I don't like giving an investor money. I like taking their money, and I like running my own strike prices because I think I can do it better than some of the hedge funds. And looking at November, I've made about $10,522 in that month, and we still have one more week to go, guys. We hit we hit in 3 months in a row the 5-digit club or better. maybe 2, 3, 4, 5 years from now, that 5-digit club might even be 6 digits, and that's what the goal is. I will say I don't necessarily have, metric goals like, oh, make $80,000 a year or make, $500,000 in 5 years. That's not really a goal. I'm more so a process goal. And in the comment section, I have my 4 or 5 goals that I keep in mind every time I run a single trade, every single trade I run. There's just one other point I didn't highlight for October's numbers. I didn't talk about the margin I had to pay to borrow money. So for the month of October, I only had to pay $30.55 of margin to Robinhood. For whatever reason, I kept running cash secured puts and I had a lot of cash on hand that I didn't need to incur margin costs. But the months prior, like September and August, I was a little bit more margin heavy. That cost me $248, $250. But for me, I like to run all of my cash as, covered calls. I actually like to own the good investments, but then I will use Robinhood margin so that I can run cash secured puts. So if the cash secured put does not get assigned, I don't actually incur any margin costs. So I'm basically borrowing somebody else's money to generate income without incurring any costs. As long as they're not assigned, why would I not take that opportunity? So that's why I like to run a little bit of margin collateral in my portfolio. And in times like this, when the market's red, I definitely will surge a little bit because I believe that some shares are at a discount, and I would rather buy shares at a discount than sit on the sidelines and then just wait for the market to go up without, uh, harvesting any more premium and then not also capturing that appreciation on the upside. So I wanted to capture both of those. If you look at the yearly tracker, like we've already highlighted, guys, we're almost close to $71,000 a year. I'm trading 15 minutes in the morning. Bell rings. I'm on the West Coast, 6:30 a.m. By 6:45, I'm done trading. I'm hopping on a train. I'm going to work. I've made $70,000 that way. That's absolutely crazy to think that that's even an option in our today's society. That's wild. But with that being said, guys, let's head over to Robinhood. I'm going to talk about the trades I plan on executing for November 24th. As you guys can see here, I have 400 shares of Tesla and then 500 shares of the QQQ. And let me head over to the Excel spreadsheet so I can talk about how I actually treat my trading. So the way I treat my trading is every 100 shares of a stock or an ETF, I treat it as an individual style of money at a individual buying point. So what does this mean? For my Tesla shares, I had 400 shares, but I have 4 different buying points. I have the 420, 450, 442.5, and then 440. So when I choose my options, I'm making sure I don't choose a strike price below this cost basis. If the market's way above these points, there isn't a problem. I'm going to choose, the premium I like, the delta I like, and the appreciation to where the market is at that time. So I can find like that nice little correlation. And same thing with QQQ. I have 5 different buying points. I have this 626.78, 609, 606, 622, and 605. So when I choose my strike prices, market green does and above these points, not a problem. If the market is red, I am not choosing strike prices below this cost basis. Some people will risk it and try to lock in premium and then hope the market doesn't go up so that they don't have to roll their option. For me, I would rather just play it safe, not have to deal with the rolling game because, guys, right now I still have a day job. I can't sit in front of the chart and look to see if, if the market's going up, do I need to roll the option? I can't do that. Sometimes I have meetings during that time. Sometimes there's an engineering problem. I can't just pull away from my day job and then have to, roll the option. So for me, my peace of mind, and then the best way I sleep at night is I just don't sell anything below my cost basis because I've already been burnt a couple of times by running this and thinking I'm better. And looking at hindsight, I could have done things differently, but for me, as just a better rule, I would rather not risk that entire situation. And then, as you guys can see, I've made $70,000 with an initial investment of $150,000. That's pretty good returns. If you need more return than that, man, you're getting a little bit too greedy. You're looking for a home run. And then by being too greedy, you're going to end up slipping up and then you're going to lose money on that. So I would rather just avoid that entire scenario. And then, if I'm not working and this is my full-time job, great. That's a different conversation. But right now I have to work. And for me, what works best for me is not selling below my cost basis. And that's easy as that. And not sell below my cost basis. And if I want to make more premium, I just extend out the expiration date. That's as simple as that. So we're going to remember these numbers, 605, 622, 606. So I'll remember these. You guys don't have to, but let's head over back to Robinhood and let's take a look at, we don't have to dive into Tesla, but ideally I usually like to run dailies on the QQQ. So let's take a look at what some of them would look like. So I head to trade QQQ options. And for somebody that is a new investor and does not know anything about trading options, 100 shares is one covered call. And to run a covered call in Robinhood, you press the sell call button. So every time in Robinhood you want to make money, you press sell call or sell put. Sell put is a cash secured put. Right now we are doing sell call. Market's at the 593.47, and I have a bunch of different buying points. So the first one is going to be the 605. As we can see for the 605 strike price, I'm going to make about $16 a premium. So this is the calculation you guys need to make, and it's different for everybody. Some people might want to like run daily so that they can see if the market's going to change throughout the week. Or like for me, in this scenario, $16 is not a lot of money for a $60,000 investment. So I would rather just push out the expiration so I can make more premium upfront, because the market has a lot of room to recover before this premiums are going to go higher back to my cost basis. So right now, expiration is November 24th. Let's head over to the 28th. And as a reminder, guys, Thursday is Thanksgiving. Happy Thanksgiving to all you guys. I'll say it again again on Wednesday, but Thursday is off. There is no trading. So for this week, there's only 4 trading days. So let's head over to the 605. So if I were to run a week-long option on the QQQ at this 605 strike price, I would bag $200. That'd be great. I also had that buying point at, I think, 606, and then also 609, and then 622, and then because my 626 was like 626.87, we'll just do I can only select 4 at a time. Okay, either way. So then this 627 would be an extra $2. It's kind of a joke, but I'm still going to lock in my money, guys. I like $2. But running those, 4 options, I would make about $492. For that amount of money I have invested, it doesn't seem like a lot, but ideally, because I don't want to risk selling my shares at a loss, I would rather take less premium. Because like the month of November, guys, you saw I've already made $10,500. I don't need to make that much more and risk my shares getting assigned away. Let's be smart. Let's be patient. The market will go up sooner rather than later. So I'm just going to lock in this $492, no problem. I will say I can also run cash secured puts. So for tomorrow, maybe I wouldn't do a week long, maybe do a daily. I might choose a cash secured put because right now they look pretty juicy at this. Close these out. Because if I were to run a cash secured put at the money at this 593.70, I would make $544. This is a little bit too overpriced right now. When the market opens, it'll probably be like 20% of what this is. So it'd be like $100 or $150. But for my cash secured puts, I like to choose a delta of 0.2 or 0.3. Cash secured puts is the only time I actually look at delta versus covered calls. It's a balance between how hot is the market, the share price I bought in at, the premium that I'm seeing on the table. Because if there's a lot of premium upfront, I'm just going to take the premium upfront versus, I look at appreciation as a secondary effect. Well, let's take a look at maybe this 588, what I sold at. That's still a delta of 0.41. So some of these deltas are a little off, guys. So for the cash secured put, I'm going to run a 0.2 or 0.3 in the morning. That's going to look completely different. I'm assuming because I've been trading options for a little bit now. It's going to be about $5 or $6 away from at the money point. Cool. So that was my QQQ. I can head over to Tesla. We can look at that same mental exercise of, hey, this is my buying cost. The market's red. I'm not going to choose a strike price below my buying cost. But just to talk about what a potential return might look like for tomorrow, let's talk about it. 400 shares of Tesla, 4 different buying costs. So let's hit the sell call button. Tesla is trading at the 397.67. My first covered call is going to be at the 420, bag $224. Next one's at the 440, 67, 442.5, 57. And then lastly, the 450, $39. So between running covered calls for my QQQ and my Tesla shares, I should make somewhere around $800, $700, 700, 900, between $700 and $900. It's also dependent on what the market does tomorrow. If the market bounces back slightly green, these premiums are going to be higher. If the market goes down, if it goes back to being red again, then these premiums are probably going to be lower, and it's going to be like $400, $500 for all of my options. Seems like a little bit of premium, but end of the day, I'll still try to squeeze out more money from cash secured puts and just wheeling and dealing that way. But yeah, guys, that pretty much wraps up the video. Hope you're doing well out there. Hopefully I explained something in a light that makes sense to you guys. I will say I am debating the idea of changing my logo. We had like the tractor with all the money around it, and I think that seems a little childish, and it was kind of, cheesy, funny, meme-ish, and it was kind of cool at the time, but I don't know, I think I've kind of been playing around with AI and generating some new images. And I like the coat of arms, having a bull and a bear, having a couple of charts, having PPH in the logo. So I think that's kind of neat. But let me know what you guys think in the comment section. Keep the old logo, or the new one I have on the screen right now. Let me know what you guys think. But yeah, guys, stay locked in, stay harvesting. Matt out. I will see you in the next video.